warahmatullahi wabarakatuh. Today I will explain to you how SGO credit is applied. I will start first with if you will look to the names, we used just a fake names and social security. Just this is just an experiment, so we can know how SGO credit is applied. Um, so we put all the information. This is will be for married file jointly. So for married filing jointly. We put the wages. The wages is $71,780. Um, the state, as you see here, the state taxes, usually the employer would withhold from your W-2 some state taxes, and this is refundable. This is used if you owe any state, so they will use from it, okay? So this for this example, we use $71,780. And we will apply the credit. We go to Ohio, schedule of credit. There is a questionnaire. First, I will show you how much without the credit you will be owing the state, and if you apply the credit, how the credit will be applied. Okay. Let's calculate the return, see how much he will owe. So as you see, the balance due is $1,500. That's for the state, and I'll explain it to you in a minute. So as you see here, you made an average gross income of $71,780. Um, um, when you file married file jointly, you get exempted for the husband, the wife, and all the kids. And to see the calculation, I'll show you how they calculate it. So to see the exemption amount, if you make 40 or less, you get exempted 2,400 for each, the wife, the husband, and the dependents. And if you make between 40 and 80, it's $2,150. And if you make over $80,000, you get exempted for $1,900. So for this example, we use a couples with no dependents. So they fall in within the 40 and the 80, which is $2,150. It's right here. So they get exempted for $4,300. So what's left is $67,480. This is how much they will after the exemption. This is how much will be taxable. So we go to the next page. It shows you how much tax liable are how much the tax liability for this amount, which is $1,500. And the way that they calculate the liability, the tax liability, is right here. So between $0 and $26,000 and $50 is zero taxes. It's exempted. After that, from 26 up to 100,000, that's the equation for the people who wants just to know how the taxes is calculated for Ohio. And if you are exceeding the $100,000, this is the calculation for it. So this person, he is liable for $1,500. So we go to the credit to see how much he owes. We calculate. So there is a balance due of 1,500. A balance due for 1,500. If we go to Ohio, and schedule of credit. There is a questionnaire. You want to make sure it's an eligible SGO organization. So yes. And we put all this information at the end of the year. The organization will give you a sheet. That sheet is very important. That it shows that you paid the organization the credit. So we fill all the information in and we do the calculation. So the balance due is zero. The balance due is zero. And I'll show you to you in details in just a minute. So here, how much tax liability you have, $1,500. And as you see in number 9, the Ohio non-refundable credit is 1,500. So they apply the full 1,500. What does non-refundable credit mean? That it will take the tax liability off. It's only taking the tax liability off, meaning you don't get the money back. You don't get cash money back. So as you see here, it'll make the amount that you owe the state zero. I hope you enjoy it and thank you for watching.